This is a video chart presentation of Global Hunter Corp, brought to you by allpennystocks.com. Global Hunter trades on the Toronto Venture Exchange under the ticker V.BOB. So look at a 9-month chart. This previous area through here is pretty much emblematic of how it traded. Very sporadic, some low volume, no volume days. In October, it really caught its wind. A run from 3.5 cents, all the way up to 17.5 cents. Volume started picking back up. Right now, it's in a bit of a consolidation pattern. We'll take a look at the lower indicators. But a play that's riding on that much momentum, that's made that large of a move, you're going to see a lot of things like this. A lot of bearish crosses, indicators retracing. They're at exaggerated levels. They have to pull back. This becomes more of a candle play for technical traders. You take a look at Fibonacci retracements, take a look at support and resistance, and see where it can go from there. So we're not going to spend a lot of time on the lower indicators. You can see the ADX. This is almost the exact opposite of what we look at in bottom plays. ADX very high, got up near 65, positive DI up at 70, the negative DI all the way down underneath 10. They just have to retrace, they have to reset themselves. That's why it's such a reliable indicator when it comes to finding bottom plays. It just can't hold those levels for a long time. The trend has to lose some steam, and some things have to reverse. Same way with the MFIs. We talk about these huge gaps in between the different levels of them. You can see the 7 shot away. 14 came back after it. 21 will catch up as well. It's just a matter of time based on previous trading patterns. So what you're going to look for at this point is for these things to start to reverse themselves now because they're getting such a great separation the other way. Accumulation distribution and a strong downtrend after the sell-off. Shaking money flow is based on the accumulation distribution, but it's weighted a little bit differently. It's smoothed out a little bit more. That's why you're not seeing the exaggerated movement in it. Still showing that selling is dominant. But because it's trending around zero, it also tells you that buying pressure is still there and somewhat equalizing the whole factor of it all. CCI breaking back down through zero. You can see this was the buy point according to Lambert. The buy was there. It was a hold all the way until here. And this was that area where it peaked out and started coming back down. Just a little bit of technical analysis lesson as far as how reliable the CCI can be when combined with other indicators. Full stow. There was trending over 50. That's what we talk about. Nice uptrend to it, trending over 50. Very strong, very bullish chart. Break back down through 50. It's getting negative because it's retracing. The tricks, I mean, this is about exaggerated as it gets, all the way up around 5. It has to retrace at that point. It's never going to hold those levels. There's the bearish cross coming back down. Typically, I would say I want to have it hold 0, and I want to see it hold the uptrend and hold over it. For this particular chart, I don't think I'd even go for 0. I'd like to see it hold more around the 1.5 or 2 level. So I want to see this trick start to flatten itself out and start to make a curl again. RSI, same thing. Very overbought. Just a huge amount of buying pressure ran this stock, 300, 400, 500%. Now it's on a retrace. The 7 is broken down through 50. The 14 and 21 are still hanging in there. So what we want to see is the 7 start to rebound and do its best to keep this 14 and 21 as close to 50 as possible. Over 50 is a bull chart, so what we want to see is that try and hold those levels. So if some buying pressure comes in, that will be factored back in a number of days, and the 14 and 21, which move a lot slower, will come back down through here, and they'll start to make a turn back the other way. One of the most common things that people will use for momentum plays is the Fibonacci's. That's where the move started. Some people will bring it all the way down here to the very bottom. A lot of times I'll take it more realistically. The resistance level that was broken, we could take it all the way down here very simply. Say from top to bottom, that's how large the move was. But this was a pretty good resistance level. When it broke through there, the people that hopped in and saw this volume surge, the break through the 200, all the moving averages curl underneath it, those are the people that are very happy because they saw the technical move. They rode it all the way through. They made a lot of percentage gains on this play. But right now, we can see it. This is still holding that 62% area. It gets a little bit of support. You can see 3 days worth right there. It also came through and filled that gap that was still left open, and it's drawing support from the fibs at this point. You always try and tie these back in with support and resistance levels from the candles. You see at 50% right here around 11. That might be 0.108, but basically right there around 11, it's going to pull some more from 50%. Gets just a little bit of support from this candle, not that much. If it does happen to dip all the way down here to 9, it should be pretty strong because there's a pretty good support level right through that area. But right now, I'd play these lines. I'd look for the 62 and the 50% area to hold. I'd look for some buying pressure to start to come in. This is almost inevitable. People that were in down low, when it ran up and all of a sudden they start to see the sell-off, maybe through here and certainly on this day, that cycle perpetuates itself. It creates a little bit of panic, so they want to take their profits and secure them. There's nothing wrong with that at that point. I always use a 10-day moving average, which is at 14.7 right now, as bull chart territory on momentum plays. So what I'll look for this to do is to hold this support level, then make a reversal. If it breaks back through that 10-day moving average, that's a buy point again. We'll see a little bit of resistance again right here through classic TA at 14. This was a support level. It fell through it today, so now it's a resistance level. So that'll be the first area of resistance. And it's going to see a little bit more kind of right through that area, 15, 15.5, all the way up to 16. If it can make a move all the way back up through 16, I'd look for this to try and probably take this top out again. If it can get enough buying pressure to move through this first area at 14 and move through 16, I'd say chances are pretty good it's going to blow through 17, 17.5 and continue its move upward. To some extent, you have to accept the candles for what they are. This made a huge move. It has to retrace. It has to reset these indicators. So now you look for it to maintain the upper part of those gains. Consolidate as it is, everything reset, and then you look for a move again. That's based on support and resistance levels. So these are the kind of things that we're going to keep an eye on with the V.BOB.V chart. As always, this annotated video chart is merely my interpretation. I'm not a financial consultant and strongly encourage you to do your own proper due diligence and consult with a qualified financial advisor before making any investment decisions. Past performance is not a guarantee of future results. Please visit the allpennystocks.com website to view the full disclaimer disclosure and do not base any investment decisions upon any material found on the website and or this video chart. No person employed by All Penny Stocks is a registered investment advisor or licensed broker-dealer. Thank you for watching and trade smart.